All right, good morning. Welcome to another episode of the Thursday Thread. Neil Guilmette and Andy Lockwood here. This is a show all about helping accounting professionals build their business so they can have the income and quality of life that they deserve. Good morning, Neil.
Good morning, Andy. How are you?
Doing great. How you doing?
Doing great. Need a haircut, but doing great.
That's okay. It just gives you that extra swarthy appearance.
That's it.
Like Ahab. All you need is an eye patch.
You're right. Not a bad idea. I'll go for it.
Maybe a peg leg. So
we're gonna have a parrot sitting on my shoulder, crapping down my back. I'm okay.
So all right. So this is I think it's our third episode, and I'm really enjoying these both on a professional note, but also on a personal side, just because I love talking to you, and I also feel like anything that we cover is almost like a mini seminar. So very excited for this week's topic, which is about KPIs or key performance indicators. And what I wrote in some of the promotional emails and spots is along the lines of, look, when you drive your car, you can look at your fuel level, you can look at your engine temperature, that notorious orange engine light that comes on, these things that are supposed to send signals to you about the health of your car. But so many of us don't really have that for our business. And you teach the people that you work with one-on-one and your presentations about how to do the equivalent for your business. So let's talk about that.
It all started with KPIs because years ago I came to the awareness that everybody's business is nothing but a vehicle to create the quality of life they aspire to and the income to support it. So if that can make sense to people, that it is a vehicle, well, without a specific destination, any road will take you there. So if you don't define very specifically the quality of life you aspire to and the income you need, how do you create a roadmap to get there from where you are now? And in business parlance, a roadmap is a strategic action plan. Well, if you have a roadmap or a strategic action plan, you need to know that you're following the right roads to get to the destination that you want to end up on. So one of the KPIs is kind of similar, or a bunch of KPIs is similar to a GPS that you would use on a vacation trip or a trip to any place. And you follow the GPS to the destination, but the GPS is giving you speed information. You've got your dashboard, and you've got a whole bunch of other tools. Even more likely when you're navigating a vessel. And when you're navigating a vessel, you need that specific destination, and you don't even have roads to follow. You can create imaginary roads. And key performance indicators are the tools that you use to measure your progress along the way. They're also tools that you use to indicate whether something is not working properly in your business, if there's a malfunction somewhere. And just like you said before, with that check engine light, when that check engine light goes on, it doesn't mean you have to stop your progress, but it does mean you have to look into it and find out what the problem is. It's the same with KPIs. The most profitable and successful businesses use KPIs to run themselves. And the interesting thing is that there are thousands and thousands of KPIs out there. So the key to success is, what are the key performances that I need to have indicators to track? How do I identify those key performance indicators? And let's start with the simplest thing. Every business owner should take a look at their throughput process. Now, a lot of people don't know what a throughput process. For those of you that do, I'll bore you to death and remind you. But the throughput process is I liken to a factory. And if we had a widget factory, we would take raw material in on one end of the factory, pass it through a bunch of processes and stations to have it come out at the other end of the factory as a pretty nice little shiny widget that we can sell for a profit. Well, that goes for a factory. It also goes for a professional services firm, an accounting firm. And I always say to CPAs, you take in intellectual capital or intellectual property on one end, you process it through, and your product isn't a widget, it's a tax return, it's a financial statement, or hopefully it's advisory services, because that's what people want to buy. Well, the way to find out or where you need key performance indicators are those areas in your throughput process that need to be managed where your profit is made. So let's just take a quick look at key performance indicators before we dive down. There are key performance indicators that are financially oriented. There are key performance indicators that are production oriented. There are key performance indicators that are people oriented. And there are key performance indicators that are just overall business oriented. Again, the key to success, and most CPA firms that I've run into understand key performance indicators, but they use the wrong ones. One of the things that CPA firms drive me crazy is the two things that they constantly look at are utilization rates and realization rates. And utilization is how well are we using the staff that we have, and realization is what do we collect compared to what we bill, which to me is kind of a dumb way to do business, because if I'm going to do business and I'm going to bill you for 80 hours, but I'm only going to collect for 60, what's wrong with that picture?
Yeah.
Either I was afraid to bill you what you should have been billed, or I was afraid to charge you what you should have been charged, or I'm inefficient and incompetent in my production line. So using utilization and realization rates are nowhere near as good as using things like profit, which is what we're all in business for. We're not in business to give money away or time away. We're in business to make a profit. And God, there's nothing wrong with that word. Profit is not a dirty word. Without profit, we can't pay our bills, we can't pay our insurance, and we can't pay our staff salaries, and people don't eat. So profit is not a dirty word. And the objective of any business, and especially in a CPA firm, is how do I optimize my profitability? And that's the key to success, optimize profitability. Unfortunately, in many of the professions, in the CPA profession more than most, there's an awful lot of that's the way it's always been done. And there's a lot of the tradition of the class of 1946. And as an example of that, again, is we sell billable hours doing our technical stuff instead of selling value.
Yep.
People don't want to buy accounting services. I don't see people going out and where can I buy some more accounting services? More importantly than that, the AICPA has been pushing for years that CPAs are the most trusted advisors. And it is true, people do look at CPAs as trusted advisors. Unfortunately, CPAs don't look at themselves as trusted advisors. So let's get some thought on key performance indicators that I recommend when I start working with a CPA firm. And the first thing I ask is, as a key performance indicator, is what is your profit per client? I get that deer in the headlights stare. I look at every client as a potential profit center or loss center. And if they're not profitable, why do I have them?
So how do you determine, you may be getting to this, but how do you determine the value of a client?
Well, there are a bunch of things about it. But first of all, in most firms that I look at, just simply determining the profit per client, how much time and energy have we put into it. One of the best key performance indicators to start with is gross profit. And for a professional firm, cost of goods sold is very simple. It's labor. So let's take a look at our gross profit overall in a firm. Let's step at that. My experience says to me that, and again, I'm not talking about Dewey, Cheatham, and Howe monster accounting firms. I don't work with them. I work with smaller firms, 4 or 5 partner, 10 partner at the most. You should see a gross profit in excess of 55%. You should shoot for 60% gross profit. If you're not making between 55 and 60% gross profit, there's a lot of things you can be doing wrong, but you need to take a look at what they are. Let me give you a funny example. I'm working with the firm now, and I'm arguing with the managing partner. And I'm arguing with the managing partner because he doesn't want to let go of what they've always done in the profession since the year of stone tablets. I said, dude, just stop and think for a second and listen to me. I want you to think of all the payroll work that you do, okay? All the time that it takes, all the people that it takes, and tell me how much you charge for it and how profitable it is.
So that should be, is that fairly straightforward because you can look at the expenses, the hours and the hourly rate and all that type of stuff?
Absolutely, fairly straightforward.
Yep.
The bottom line is profit per segment is another key performance indicators. What is our profit on tax returns? There should be a key performance indicator or for profit on tax returns. And you can do that as an overall or profit per tax return. There's also another segment of the business is bookkeeping. That's a separate profit center. What are our profits? So we've got to break out the bookkeeping, the taxes, the advisory services, and anything else that you do as a profit, as a segment to your firm. Every segment should be monitored with a key performance indicator. What's the profit margins that we expect? So we can take a look, and in doing a tax return or pricing a tax return, we use those key performance indicators to determine what we have to have. I'm working with a firm right now where the average corporate tax return, and it's been a firm that's been in business for 18 years, started out in his basement and he built it up to a nice little firm. Unfortunately, he doesn't know how profitable he is. He just looks at overall numbers, not an individual. We look down. I know for a fact that $550 for a corporate tax return is giving it away. It's just giving it away.
Yeah.
That corporate tax return, I believe, should be $1,500, depending upon the complexity of it. I have CPAs that have corporate tax returns where they also have to pay taxes in 17 or 20 or 50 or 40 or 50 states. That's a more complex return. Bottom line, a basic corporate tax return for a small business in the $10 or $15 million a year range revenue-wise should be at least $1,500, if not more.
Yeah, that seems low to me. So, all right. So if you're just joining us, this is a Thursday thread. We're talking to Neil Guilmette. My name is Andy Lockwood, and we're talking about key performance indicators. And we're speaking specifically a little bit about client value and how much it costs to perform different services for them. I was going to ask you a couple of questions about client value. One is, and I'm only comparing this to my own college advising business a little bit. There's some clients that we spend more time on, and they become less profitable than the others. It's incumbent upon us to manage that. But it's also the case that for most of our clients who stay with us for a long time to do their financial aid forms, there's more work done up front, and then the maintenance over the years is less work for the most part. So the lifetime value in terms of the recurring, annual, or in our case, monthly revenue that they provide, that's part of the value also. It's not just a one shot thing.
Right.
I think the other thing though that gets overlooked a lot is each client, in theory, is capable of referring multiple other clients to you. So that to me should be part of the lifetime value too, and that is also in my practice, it's a key performance indicator. It's interesting. Like you started out talking about KPIs that are based on operations and all that. I'm thinking in my business that what I care about are how many leads I'm getting each month and each day. My monthly subscriptions. I have right on my whiteboard. I see that I have 222 people paying us monthly subscriptions, and I track all that type of stuff. And we do very little once the business is inside through the in the factory, as you like to say. So there's all kinds of, but those are really the only types of KPIs that I track, and I see if I'm low a little bit on the leads coming in, which right now we're not. But I can always do a presentation and get more people in, so I'm constantly gauging it that way. So it's just interesting that you're starting with the throughput process, and I was thinking about something else.
Well, it's interesting too, but you're right, Andy. The secret is with key performance indicators, it tells you where to put emphasis on your business. You just said if you see that the throughput funnel of new prospects is slowing down because the key performance indicator goes below a certain point, you know that you need to go out and stir up some business before the lack of incoming new business starts to affect you.
Yep.
So key performance indicators tell you the health of your business and also indicates where you need to put emphasis. There are throughput process. There are KPIs for staff. I just worked with a firm last year on this, and one of the KPIs we set forth is we want to track the number of times a staff person creates a conversation with a client. They don't have to spend hours on it, but we are looking for 10 client contact conversations per week that are started by the employee.
For 10 different clients or 10
with clients, with our different clients.
Okay.
And the purpose of that is to generate business. But if we don't set forth 10 a week as a performance indicator and an expectation of 10 a week as a performance indicator, most of the CPAs or accountants in the firm will never really have conversations with the client. So we teach them that here's the conversation. If I was speaking to you about your accounting on a regular monthly basis, and I said, Andy, before you go, may I ask you a question?
Yes.
How is the business running in general? And are there any areas of the business that are frustrating you right now? Just one question. I got permission to ask the question. I asked one question. And if I ask 10 different clients that question during the course of my regular work week, it takes no time at all, but I guarantee you I'm going to find 8 different reasons that we could be doing more business to help our clients on an advisory basis, on a proactive basis. Yeah. So performance indicators help you to be proactive at the right time in the right place.
I would add to that. I think that's great. I would add, but there's also the potential for human error. So you've got to be supervising your staff. But I think that's great. Incentivizing them. I'm sure you do all that. I think it's also important to have a systematized way to do that doesn't rely on the potential for human error. So in my practice, we send out a written newsletter each month that goes out to about 1,000 different people, current clients, past clients, centers of influence, whatever. So they're all hearing from us at minimum once. I don't think they're all reading it. I know they're not, but I get enough feedback from people who are reading it, and occasionally they pass it around to prospective people, which I encourage them to do. And then we get leads that way also. But I want to make sure that our clients hear from us. That's the first way. We also do a monthly Facebook chat, kind of similar to what we're doing. But I do one for clients only to make sure that they know here's what you need to be doing now each month. Here's some questions you might have. So they may not listen to it. They may watch it on recording if they don't make it live, or they may not know it at all, but they get an email from me also saying, hey, I'm going to be here, supporting you, any questions that you have. And I'm going to tell you what you need to be doing each month. So I've made it into a system to make sure that they hear from us each month. And we will seed, certain questions like what you said in there, particularly about generating referrals, or possibly they're at one level of service but upgrading to a different level. Maybe they're just doing financial aid stuff with us, but I'm offering them essay help or other things. So I would do both. I would, if I had staff, I would definitely consult you on getting them to ask these questions, but I wouldn't rely solely on that. I would also make it a point to institutionalize or systematize the other touches so that clients know that I'm there for them.
Absolutely. Well, I watched the show The Profit on cable TV. I happen to like Marcus Lemonis very much.
Me too.
We think alike, and Marcus I had the same idea, but he brought it out on the show that the 3 keys to success in a business are people, process, and product.
Yeah.
Now, product means you need to provide a superb product, not in your eyes, but what is a superb product in the eyes of the people purchasing that product?
Right.
If you're providing a tax return, you may be awed by the wonder of you doing that return. But how does your client feel about that return? And are they aware enough of the value that you're bringing with that return? So a key performance indicator gives you the opportunity to look. Let me just give you a quick example along the lines you're talking about. If I start with a new firm, and I'm starting now tomorrow with a new firm out in California. And the first question I asked him was, I want you to tell me, what's your gross profit margin? And he didn't know. He said, "How's a CPA?" It's like the shoemaker's kids going barefoot. So
can I use it? Actually, you said it a couple of times. Like I don't. I mean, I don't know the exact number. But for me, but my bookkeeper has all my numbers on QuickBooks. So if I logged in right now, it would take me probably 45 seconds to tell you that number.
right.
So he's unable of doing that. He doesn't have a bookkeeper.
He's able to do that, but he said to me it's not necessarily accurate because they don't keep track of things properly. So I look at what's your overall gross profit margin. It's a target. If it's below 55%, we have profit leaks. No two ways about it. Now let's take a look at profit per engagement and profit per client. If we're not measuring that, how do we know which clients to work with?
Right. Or which to say goodbye to.
Right. Oh, absolutely. And profit per segment. Again, a segment is a payroll, for instance. I don't believe that any CPA firm, any small CPA firm, when I say small, up to $5 or $6 million, you should not be, either you're in the payroll business or you're not in the payroll business. If you're not in the payroll business as a full focused business, you're losing money doing it. You can't make money being in the payroll business. The liability is high. The time that it takes to get it done is tremendous. And clients don't cooperate. So it's a real bottleneck in the throughput process with very little, if any, profit whatsoever. And the accountant is just afraid to let it go. And until you take them and shove their face in it, so to speak, to say, look at this. You're complaining that you have no time for your family. You'd like to have more money, but you're expending time, energy, and resources to do a function that costs you money instead of makes you money. Why do you keep doing it?
Well, is one of the objections that they don't want the client to go somewhere else? They'd rather keep their, wrap their arms around them.
The big fear is that, well, if I stop doing payroll, they're going to want me to reduce my fee, which is not true at all. That's because we talked about that in a previous one, but the fear of fee is a big driver for CPAs. They're terribly afraid. They have problems talking about fees. They get fee resistance. We just did the last one on fee resistance. It's one of the biggest issues in the accounting profession is fee resistance. And it's got nothing to do with client fee pressure, as I said. It's not about the clients. It's about the CPA that create their own problems. They don't know how to define value, and they don't know how to bring the client into an awareness of their value so that the client is just looking at, I'm paying you to do that accounting stuff that I can't do myself,
right,
that I don't want to do, but the government's pointing guns at me and saying, do it or else. And I don't see much value in it. I mean, I just don't see that much value, except I have to have it. It's a necessary evil and a commodity. Well, if that's what you allow yourself to be relegated to, key performance indicators aren't going to be a lot of help for you because you're not using them properly. So there's key performance indicators. Well, you just mentioned it earlier. There should be several key performance indicators in your marketing funnel. How many?
I mean, I always, I hate overcomplicating things just because my brain can't handle it. But to me, the thing I care the most about are my leads. I mean, that's the lifeblood of any business. How many prospects am I speaking to? Right now, I'm generating more than I can actually handle. So I can kind of dial it back a little bit. That's not something I'm monitoring. I'm just looking at how I feel at the end of the day. But if I don't have a good enough pipeline, then that is the only thing I really care about, and everything else I feel like more or less takes care of itself because we've spent some time systematizing things. But that's all I care about personally. That and how many subscriptions, how many monthly, my recurring revenue. Those are the two things.
Well, you want to look at profitability of that too, because I like to find out what does it cost me for every lead that I get, which means dividing your total marketing budget by the number of leads that you get.
Yeah.
Now, I'm working with a client down south with a unique specialty practice, and we've come up with the number that it costs us $500 for every incoming phone call that we get. And it costs us $2,000 for every client that we bring in. So
based on the direct mail and the advertising and all that, or
direct mail and advertising, and then once they come in, we have to close them. We have to send them a bunch of information to get them up and running. We have a lot of staff time involved to get them up and set up and running, because it is a specialty practice in tax resolution. So we come up with the idea that every client that we bring in the door we're working with had an investment
Mm-hmm.
of $2,000 on our part, and 500 of that was to get the phone to ring. So we invest 500 to get the phone to ring, and then the rest of the process is another $1,500 per client before we start seeing revenue coming through.
Yeah, and that's interesting because it sounds high to me, but when you look at the lifetime value of a client,
that's key.
It may not be high, right? It may, yeah. So it's always good to get a handle on marketing as not really an expense, but that should be, like you said, should be a revenue generating profit center to get a return on investment. So I know, like I do a lot of marketing. I actually doubled my marketing in the during coronavirus, and I did a webinar with a local news media publication. They charged me $3,000 or something to do it. And you may think, wow, that's a lot, for just one webinar.
Yeah.
But I immediately got one client out of it for $12,000, and I got a few others at smaller levels. So my return on investment for that was, more than 7 to 1, and it's still producing. So that's why I look at all this stuff, is I want to make sure I'm profitable on this. But if something was costing me too much, because I don't think spending $500 per to get a client is that bad, and I don't know if $2,000 is bad, but
not bad at all, because our average fee runs anywhere from $15,000 to $100,000.
Yeah, so then they can probably afford just to invest more in the market. That's what that.
We also want to make sure that percentage-wise, we're spending the absolute least. We're managing the process, people, product, and process. We're managing the process that you mentioned in such a way. The key performance indicator tells us that if we look, all of a sudden, our cost of getting leads, a call, goes up from $500 to $750. What's wrong?
Right. Yeah, that's something else.
What's wrong? It also gives you the opportunity to reward your lead referral sources.
Yep.
If you know that the lifetime value of a client in a CPA firm, a $10,000 client, the AI CPA says you're probably going to keep that client for 7 years. My experience says that if you properly nurture that relationship, you'll keep it for 15 years.
Yeah, at least. Yeah.
Right. And if you look at the lifetime value of a client over a 15-year period,
right,
if you give me a lead that brings me a client that I'm getting $10,000 a year over 15 years, that's $150,000 gift that I just got from you.
Right.
Would it kill me to send you a $250 lobstergram to say thank you?
Yeah. Exactly.
You know what I'm saying? So
yeah,
it also allows you to see what you can do to reward those people.
I think the other thing, sorry to interrupt, the other thing is it lets you see what your true budget is, and the more you put yourself out there in the marketplace, the more you shut out your competition.
Yep.
So you can get to the point where, even though you may not think you're doing a lot, and I'm going to speak personally here also, but I know other people who've experienced the same thing. So I can run a few Facebook ads, and I can do direct mail, and I can be in these webinar things, and I can occasionally get some some free publicity. So what I hear a lot, definitely not every day, but a lot, is, wow, it's like you're everywhere. And where I really am is I'm showing up in just certain areas where I'm hoping that they're going to notice me, and that's an investment, several $1,000s a month worth of marketing investment. But I know that my competition's not doing that. So that's an edge that I have over them, because I know how much I can invest in marketing, and they don't do it at all. And I think that's the same thing with CPAs. I think most CPAs don't really invest in any type of marketing.
Well, they don't. They spend money on marketing,
right?
But they don't necessarily invest. And my thinking is, it's an investment, and an investment demands a return.
Yeah. So
if you don't have KPIs to measure your return on investment, how do you know how you're doing? How do you know what's working? How do you know what's not working?
Yeah, the line is, I think it was P.T. Barnum said something like, I know that 50% of my marketing works. My problem is I don't know which 50%.
50, exactly.
Yeah.
Exactly. And as I said, I had a CPA firm, that partner, that bragged to me a few years back, said, Neil, we sponsored 9 golf outings this year. Yeah. And I said, wow, I'm impressed. That's expensive to do, sponsoring a golf outing.
Yeah.
I said, how many new clients did you get?
My
None.
question exactly. Yeah.
Yeah, none.
Yeah, we're doing it for brand awareness. We're not doing it to get.
Yeah, right. How many leads did you get?
Yeah.
I finally came down to it. He got mad at me. He said, look, we're just trying to get our name out there.
Yeah.
I went, oh, now I understand.
I'd be like, oh, you're that jerk on the third hole. I lost 3 balls on that hole.
Well, my question is this. If you really want to get your name out there, would you be interested in a way that you could do it for 1/10 the cost of those 9 golf outings and multiply the number of people that get to see your name by the millions? I said, yeah.
And have a better chance at converting them into actual prospective clients. Yeah.
Hire a skywriter. Hire a skywriter. Have them put your name in the sky above Long Island. At the same time, have another guy with a banner with your company name flying down Jones Beach, right down up and down Jones. You'll get your name out there. You're not going to get any calls. You're not going to get, and you're not going to get any more business than you got from your golf outings. Yep. But at least I can get your attention by getting you to look at the KPIs for your marketing funnel and what it's doing.
Yep. Good.
And this is a perfect example of what not to do.
Yeah. But and what is so common also. So all right, so that was great. So let me see. I see a couple of comments coming in, and if you're watching this even on replay, please like the page and be signed to be notified when we come on. We do this once a week. The Thursday thread is 8:30s every Thursday. It's part of a marketing experiment we're doing for a few months. Neil, do you want to answer David's question about labor costs? Does that include taxes and benefits and CPE?
David, yeah. Hi, David. Yes, it can include taxes, benefits, and CPE, which is your total labor cost. You get a bit more accurate picture that way. But getting any idea of cost, even if you're just using gross salary and taxes, anything is better than nothing as a KPI. And naturally, the more you break it down, the benefits and the CPE and everything like that, you're going to be better off. You're going to see a more accurate number.
All right. So as follow-up question, I can guess your answer to this one. Does that also include owners?
No, I don't include owners, David, in that. I look at the staff. Try to look at just the staff. The owners in CPA firms, some owners take a reasonable compensation, and other owners take way more than they're worth. So I usually try to leave the owners out because to me it skews the numbers in the wrong direction. I'm looking at my factory. What is the key performance indicator for the factory? And when you're doing it not just for your own firm, the same things that you do for your firm, you should be doing for your clients, because most of your clients do not have key performance indicators.
Yeah.
And it is a great area to add value-added services to your service line to help your clients and help develop a set of key performance indicators.
Great. All right. Jennifer says, thanks for the information. Thank you for joining us, Jennifer. Yeah, so here's good testimonial experience from David. We got rid of over 200 payrolls, I guess that's 200 payroll clients years ago, and without any fee reduction and referral fees. That's terrific. So you made it into a profit center by getting the referral fees.
Thank you, David. I've been preaching that for years. It's nice to see a CPA put that out there.
Yeah. And then this is another great comment too, that I need to take to heart more. Feed the geese that lay the golden eggs for you, sending thank you gifts. Yeah. When you have someone who's referred $150,000 worth of business, like you said before, a Ruth's Chris gift certificate or anything. Yeah, that's a great idea.
And if you can do something, I'm kind of like the Pavlov's dog guy. When the bell rings, the dog salivates. Well, when somebody even gives me a lead, I like to send them a thank you of some sort. If I get the client, I want to send a bigger thank you, but I want to do something that's outrageous. I mean, I have a client an ex-client down in Virginia that was a client in 1999 and 2000. I really helped him, and he referred somebody to me. Now, this guy happens to have a firm that does about $5 or $6 million a year. They also have, I don't know, $200 million under management because they've got management services. He's a well-to-do guy. He's got big bucks, and I'm saying to myself, what can I do for him? That would be. I thought about it. He's got a wife and 2 sons, and they live down in Fairfax, Virginia. and I sent down 4 filet mignon and 2-pound lobster and filet mignon lobstergram down there. He was absolutely blown away. It cost me $400 or $500 to send it down there, but you know, it was first class, and it's not something you usually get. The doorbell rings. There's a cooler delivered to the front of your door.
Yeah.
And you find 4 monster lobsters and filet mignons and soup and salad.
Yep.
It's not a usual thing. So again, it's memorable. I still hear from him. He goes, "I'll never forget those lobsters."
It's good. Yeah, Omaha Steaks makes it easy for that. I've done that a few times. I think the other thing, you know, getting back to the idea of doing a monthly newsletter, it's great to recognize people in public on paper. So we've gotten away from that a little bit because we've just been so busy. My assistant has been tracking referrals. So I'm going to take my own advice here, but I always say, you know, special thank yous and shout outs too, and because everyone likes seeing their name in print. So if you do the newsletter, I would think about adding that to it also.
Well, before we go, just let's go into the last thing. Take a look at the things that are important in your practice or your business. And those are the areas that you want to create the key performance indicators for. Identify the important functions and then track them.
Yeah, well, I think we probably covered ones that should be common to any accounting business and probably any business in general. You know, whether it's leads or any of the operational ones. You know, the conversations with clients, all great stuff. So, all right. So thanks a lot for watching. Thank you for sharing this with anyone you think could benefit from this. And we'll be back next Thursday morning, 8:30 a.m. like always. And if you're watching this on replay, pop your questions right here in the comments section, and Neil I will get back to you on those. Have a great week, guys. Thanks, Neil.
Thanks for tuning in and listening.